Hey, listen, I quit. Yeah, I'm going into stocks.
Name of the game. Move the money from your client's pocket into your pocket.
But if you can make your client's money at the same time, it's advantageous to everyone, correct?
No one is paying attention.
It's unbelievable.
Have to act now.
God, this is intimate. I feel like I'm financially inside of you or something.
Okay.
I have 5 houses and a condo.
I'm considering going long on April wheat. What do you think, Valentine?
All right, so hi guys, welcome back. So I hope you've learned a lot so far following the program. I hope you've managed to digest a lot of the information. I know today everyone's really excited about doing this particular module or lesson because it's all to do with brokers. And I think that before even we talk any more about assets, we need to cover this. I did say to you guys from the very beginning that this is going to be very in-depth. It's going to be a very in-depth program. It is totally free. And I'm doing this primarily because I feel so pained that there's so many trader programs out there that don't cover the basics, go straight to technicals, tell people a load of crap, and then basically stretch their hands for money. And if it's not that, there are definitely a couple of free programs like this online that are just not in depth enough. It's just a lot of dog wording, so I like to say, that goes on, and sometimes it drives a lot of excitement. Marketing is a really big thing these days, and you're going to find a lot of experienced marketers out there who are going to be very good at getting people all riled up and buzzed up about maybe a new idea or a new concept. But the question you've got to ask yourself is, how come with all of this stuff out there, how come so few people are able to make this reasonably work? So few people can even show a reasonable return on an annual basis, right? It's just what it is. And it's just something worth thinking about if you're new to this. And that's kind of why I'm doing this. For those of you who are maybe jumping in for the, the deep end, like you're seeing this video, this is lesson 5. So you need to go back to the introduction and watch the introduction specifically, because then that will give you the idea of why I'm doing this, but it also give you an opportunity to see that I'm qualified to do this because I put my return up there for the year for everyone to see, right? Personally, I think this is important, so I've put it up there, right? Just go have a look, whatever, I don't care. The reality of it is that I think it's important to show that this is achievable and it's just what it is. I'm not out there telling people that you're gonna make 300-400% a year, because that is not sustainable. I don't care how good an investor you are, you can't do it. At least you can't do it consistently. You can get lucky, but you can't do it consistently. But anyway, enough of that. Let's dive straight into the program. There we go. The B word, brokers, right? Who are brokers? Now, generally, when we think about brokers, they're regulated entities, right? Not in all cases, because we do have offshore brokers, as they're called, brokers who are not regulated, right? But essentially, they're middlemen. They provide market access for both retail investors and institutions, right? Some people think of institutions as primarily non-retail, but in a way, they're just retail institutions because essentially they're dealing with the product at the retail end, right? Whilst they might have a few perks, some wholesale costing in there that allows them to have better, better cost advantages, but essentially they're still all retail, right? So again, they're the middlemen that stand between those who make that market and those who are taking that market, right? So in effect, that's what brokers are in a short sentence. I have my thoughts and opinions about brokers. Sorry guys, I'm a little bit bunged up today, so you'll hear me sniggering and sniffing, but hey, it's life. It happens, right? We all get ill. And I live in a part of the world where we are now in our winter seasons, and it's quite cold, and it's quite common for you to develop a cold. So don't worry, I've got my ginger tea to the side, so that always solves all problems for me. Anyway, yeah, but back to what I was saying. So brokers, I have my reserve, right? These guys they're not nice. Some of them they can be quite dodgy, and you just kind of have to be careful, which is the point of this part of the course, is kind of sort of create a degree of awareness, right? Because you're going to need them. There's no way to operate without them. So you're definitely going to need them, but you're going to need to know what you're looking for when you start to deal with these guys. Okay, so why do you need a broker? Right, so first and foremost, cheap access, right? Brokers tend to be able to sell themselves on the basis that we can give you access, but at an affordable cost, and your general outlay to do this is going to be low. Pretty much all you need to do is deposit a certain amount of money in your brokerage account, and we're happy to provide you all the access you need. Well, that's on the surface. So cheap access, right? And so these days we got a lot of discount brokers, right? Obviously you guys see from the introduction, my broker is Interactive Brokers, right? For some other people, they've got other brokers that they use. I also have other brokers I use beyond Interactive Brokers, because they give me different advantages, right? So brokers, you tend to, in some cases, you even might want to diversify across brokers, right? But they definitely do give you cheap access. There are a lot of discount brokers now on both the stock side, since we're primarily talking about stocks, but also on the Forex and CFD side, and also on the commodity futures side. The other thing brokers do is provide good technology. Now, if you've been trading for any length of time, you know that if you are handling your own market data, for example, so you weren't taking that as a retail investor, right? You were a professional subscriber, you'll be paying hundreds and hundreds of dollars for data access. Now, it's no secret, there are a lot of platforms out there that provide technology for you to trade through, right? So some of the common names that we know, and of course, I'm not sort of saying these guys are any good, they're any bad or anything like that. I'm just saying that there's a lot of tech out there, and some of it costs money. So if we take, for example, Trading Technologies as an example, you've got Sierra Charts as another example, and all of these are providing technology that allow you to access the market and get some tools so that you become a more efficient trader, or at least that's the idea. But then on the flip side, brokers can provide you that technology for free. So for example, I use Trader Workstation within Interactive Brokers. That's a free platform that allows me to access the market and, so on, right? So technology is one of the reasons people go through brokers, because if you ask the average trader and say, look, you have to go set up your own technology, you got to get it all done and plugged in, then they're probably never going to trade, right? So it's not going to be an easy access route for them. Brokers also they take responsibility, like some of them anyway. So if you're dealing with a regulated broker, this is more, I think, directed towards a regulated broker, then they're going to take responsibility for a lot of things. And by that, I mean things like insuring you, making sure that you are compensated if something were to happen to them. So in the UK, for example, we have the Financial Services Compensation Scheme, which I think in the US, there's a similar version, but that compensation scheme will entitle you to up to $85,000, for example, is covered. So if you were in a brokerage firm, it went under and you had 80 grand in there, then they are going to make you whole, right? So these regulated entities allow you to get that kind of protection when you're investing, because we all know in the investing universe, things can go wrong, right? Whilst if you're with an offshore broker or an unregulated broker, for example, you're not going to get that. So unregulated brokers might offer other kinds of advantages, like higher leverage, for example, which is one of the primary reasons people like unregulated brokers, is because you don't have to put up a lot of margin. And this is true in both the stock world and the Forex and CFD world. I think also in the futures world, largely. I'm not too sure I've come across too many unregulated brokers in the futures space, because futures are largely a US thing and the CFTC has a lot of sway on this. So I haven't seen this a lot, but I'm pretty sure they're there. They got to be, if there's advantages to be taken, like that, then I'm sure that you could probably have access. But I'm pretty certain it's going to be some kind of CFD, right? But either way, those entities, like unregulated brokers, often don't take responsibility. So if something goes wrong, for example, and the thing goes under, they just disappear. It becomes everyone calls it a scam, blah, blah, blah. So this is also the case in the crypto space. One of the reasons why there's a big push towards crypto regulation. For the life of me, I can't understand why people don't want this, because at the end of the day, if the crypto universe is going to be a universe that's going to grow, it's going to attract, money into it. It needs to be regulated. So, we saw some really high profile disasters, FTX, Terra Luna, for example. So all of these were events that happened in the crypto universe that really murkied the waters. I mean, of course, people who know, for example, I'm an investor in Bitcoin. But again, if people who know, right? And again, this is not a recommendation. I'm not saying you should go invest in Bitcoin, but I invest in Bitcoin, and I know that the crypto universe has a lot of potential. Do I want to participate in crypto securities, which is stuff like, the altcoins like Cardano and Ethereum? These are all crypto securities, right? Do I want to participate in owning, a crypto property, something like Bitcoin, which is not the same as those crypto securities? We're talking here about sound money, right? Then yeah, absolutely. That's something I'd want to participate in. But a lot of the entities that are allowing access to that market are sometimes not regulated, and often they do bad things, and that tends to take the whole legitimacy of an industry down. So for me, I think you need a broker who can take responsibility, and a lot of brokers do, and that's going to be part of your criteria when you're making that kind of decision. So what are the broker types? Now we're going to talk about them in terms of asset class, right? So, because obviously a broker is just an intermediary. Some of them will give themselves different names, especially in the CFD world. You'll hear about direct market access, blah, blah, blah. It's all bullshit. In reality, they're all just peddling CFDs, and they're the sole counterparties, or they're within a group of counterparties where they're able to spread their risk. There's nothing else to it. Anything else they tell you that you're... I'm not going to insult you as an audience, but if you're dumb enough to lap up what they're selling, then you're probably going to end up with a broker that's going to ruin you, right? So, but anyway, let's talk about broker types. So stockbrokers. Stockbrokers can be both unregulated offshore or regulated under US securities law or European securities law. So they also bring investors together with the exchange, essentially, so people can trade, right? So you can get access to other counterparties. Obviously, like I said, they can be both regulated and unregulated. And then we have commodity futures brokers, which are pretty much, again, brokers who are on the exchange, and they provide access to the major commodity exchanges. So we're talking about the CME, the Chicago Board of Trade, ICE, Intercontinental, and all of these exchanges and those venues are regulated by the CFTC. Now, the US, of course, is the primary exchange venue for commodity futures. So you're going to expect a lot of the activity around that is going to be US-centric. Of course, because of the popularity of index futures like the S&P 500 E-minis, for example, and now the E-micros. And so the popularity of those asset classes also have led to retail investors in the UK, for example, showing more of an interest. And then we have Forex and CFD brokers. Now, these guys are largely, in Europe anyway, are largely regulated, but due to leverage changing rules, because at one point, if we go back about, when I got into the business, this is many, many years ago. I mean, at some point, if you had a Forex broker, I mean, it was literally, in most cases, it was a guy in a bedroom. And these brokers grew over time, right? But what we started to see was that, of course, the leverage ratio was like 500 to 1. I mean, at some point, it was 1,000 to 1 in leverage, right? So these were entities that were highly leveraged. And obviously, the average investor who didn't know a lot about investing, we're going back to, in some cases, pre-financial crisis and post-financial crisis, like a year or so after. So most people, their first exposure to financial markets was via the credit crisis in 2008. That's what created the world awareness. It was actually what birthed as well Bitcoin. I mean, Bitcoin was a direct response to that crisis. The fact that governments would participate in the decline of a financial ecosystem and then bail it out with taxpayer money was all the rage. Everyone was just boggled that, because of the decline in asset prices at the time, people lost their job, and because some of these companies were really hard hit, but then the government bailed everybody up, but in turn caused asset inflation in securities, for example. So you got asset inflation, which is not really, everyone is saying, well, the injection is to stimulate the economy, but what it does is it creates asset inflation, right? So the people who were in the know at the time were able to invest in cheap assets and then obviously make a ton of money. And you just have, if you don't believe me, just look at any chart of any asset from 2008 till now, and you can see the explosion in growth, right? So again, this is just something that that's just part and parcel really of a modern economy. But again, like I said, a lot of the entities in this space are regulated, but again, we also have entities that are not regulated. They're unregulated brokers. And those are the ones that, we have to be really conscious about whether we deal with them. So like I said, but going back, leverage was like 1,000 to 1, right? So that was the beginning of the whole thing. And then over time, we saw that the regulated entities started to get regulation recommendations from the regulator saying, we need to reduce that leverage because it's exposing people who don't understand. So those early people who only found out about the market when there was a financial crisis, right? And people had this awareness now that was created out of, the political impact of what happened. Now all wanted to be market participants because they understood that, oh, damn, you can make a lot of money as a market participant. So, why not get involved? So one of the easiest ways to do this was to join a Forex broker or CFD broker, because trading currencies was probably the easiest thing to get into. I recall those days, it was really difficult getting a broker that will give you access to US securities, which are, in my opinion, the most exciting. I mean, European stocks, boring. And, for me, there just wasn't enough there. But then again, US stocks, I think over about 5,000 US stocks. So it was just a more exciting market. They had a flourishing penny stock market at the time. So there was a lot of reasons to want to invest or trade in US markets. Of course, there were people who are now starting to understand the index, for example. So that brought along, brokers like IG, for example, came along with the index, CFD index wave, right? But people started to understand index futures, and they also wanted to get access to US futures, which was incredibly difficult as say, for example, a European or UK citizen. So things have changed. They've come a long way, but that also meant regulation tightened up. So, for example, in the Forex and CFD world, leverage came from 1,000 to 1. In the space of a decade, it was pretty much down to 30s to 1. So it made it no longer attractive for people with a smaller amount of capital, right? So you needed more money deposited at a broker in order just to trade, full stop, right? Because if you opened a standard lot with a 1:30 leverage, you're looking at approximately $3,000, to open a standard lot position, right? So, it was, things changed, right? Obviously, it's the way it goes, right? Nothing you can do about it. Things change. So the idea is that I'm trying to foster here is that most people now want to be part of unregulated broker entities. There's a lot of risk there. And that's why if you are with an unregulated broker, the leverage is really high. So you don't need to have as much money deposited. Depositing and withdrawing is rather quick. So and again, not financial advice, guys, but generally what I would say to newer traders is put the money you need to trade for the duration you need to invest or trade. And if you feel you need to add more because you want to get into more positions, do that. And if you make any profit and you're not sort of compounding it, which in an unregulated broker, that's an unadvisable approach, I would certainly withdraw those funds unless I'm actually going to trade with them or put them into, expose them to the market. So these are the three type of brokers that we have, right? So stock brokers, commodity futures brokers, Forex or CFD brokers. Now, let's expand on to CFD, because I've used the word CFD and I haven't quite defined it. It's called contracts for difference. So essentially, think of it as a piece of paper, which is an agreement between you and your broker or broker dealer, who's the counterparty, and it's a bilateral agreement, right? So I agree that these price quotes you're giving me on crude oil is essentially accurate, and I'm happy to kind of buy that. And if the price of crude oil goes up, you are happy to pay me any profit. So it's a bilateral agreement, right? So it's a contract for the difference of an asset in terms of growth, right? So it's not actually the asset. In some cases, well, there have been changes to the law, but stock CFDs, for example, used to be able to give you temporary control over the stock, but then certain smart individuals started to use CFDs because they had higher leverage to take over companies. And again, if you've never seen this before, then you should look at it. This was pre-2004, which I believe that was the time they changed that law. But if you go back and you sort of Google online, like Moss Brothers or Shami Ahmed, you're going to see some of the things that, Selfridges and some of the other stores that, fell victim to this kind of behavior, where people were launching takeover bids with CFDs. So the laws changed, so you couldn't use CFDs in that way anymore, but it did used to give you more or less temporary access. I believe the tax rules around CFDs for stocks are relatively, a lot of the brokers will take tax information, because I think the US has a way that they look at CFDs now from a stocks point of view. Whilst if you take something like Forex, it's still up in here. If you're in the UK, for example, again, get tax advice on this if you are actually a profitable trader in Forex. But again, if you're trading Forex, you will often find that the law is a bit sketchy in terms of how tax and gains get handled. If there's any tax on gains at all, because some of the activity can just be considered gambling, which obviously in the UK, for example, no one taxes gambling gains. And it's a little bit more complicated than that as well, depending, because revenue services can be complicated. But in the US, as far as I know, any gain is a gain, and that's like a really tax heavy country. So again, if you live in the US, then you're probably going to ignore a lot of what I'm saying, because the US authorities will take taxes from you. But again, that's just how the cookie crumbles. So in the US, there's a ban on European CFDs, for example. So again, brokers who solicit US clients get really hefty fines, and it's never nice. So, it could really impact them. So again, if you're a US citizen, you're unlikely to be able to trade with a US broker. So Forex and CFDs, I think there's a lot more complication there if you're a US citizen, unless you're using maybe brokers within the US, and I don't know how those go. There's a lot of horror stories. In my opinion, I think European brokers are much better at this business. Bad in brokers. This is something we ought to talk about. Brokers, it's a mixed bag, right? Now, for me, the key three things you'd want to consider with brokers is counterparty risk. Now, go with I can't say this enough, right? Go with a broker that is big, right? That is going to be able to handle ups and downs in the geo landscape of investing, right? And by that I mean they're able to deal with systemic risk, right? So things like 2008 or like the Euro Swiss crisis, right? So you want to be able to deal with stuff like this. Brokers expose their investors to counterparty risk because they're booking the trades. And by that, when I say we're booking the trades, like they're acting as counterparty to every single trade on their book. And in some cases, ones that they can't do, they will pass on to others who are going to act as counterparty. So while the risk is diversified, but someone is essentially taking the bag, right? So there's a lot of counterparty risk, and that can cause entities to fail. INFX, I think to some, I'm not really sure. I don't want to say any broker's name that turned out that they reinvented themselves. But INFX is obviously one that was a failure, because of these kind of systemic risks. And there have been a few others. A simple Google will probably tell you brokers that have failed and, with their clients' money inside of them. So counterparty risk is a big deal. So you want to be with the top, in my opinion, the top 5 brokers globally that have a ton of clients, of millions and millions and millions of dollars of assets under management, are more likely to weather through it. If you go put yourself in a tiny broker no one knows, and they're selling you the dream, high leverage, then you're probably going to get into trouble at some point. I know a lot of people personally who've done this and have got into serious issues. The other thing is market manipulation. Brokers can manipulate their own market and they can do it not necessarily always by, giving you a different price quote, but they can increase the volatility within the platform, right? They can increase the spreads. So that's one way to manipulate markets. So essentially, because they're trading against their own investors, it's in their interest that they protect themselves, not only from the investor making a lot of money. They need to be able to prevent that as much as they can. They can levy very high costs. So that could be either swap charges, for example. On my swaps, we mean by rollover charges, the charges they charge you day to day. So all of these things that happen inside of a broker. Now, this is something every broker is different, so I'm not going to teach you about costs of brokers in this program, but you should do your own research in that. Look at what the broker's key terms are, how much they charge for things, and ask them these questions. Even if you need to get on the phone to them, this is very important, because if you get yourself with a broker that manipulates your positions and trades, for those of you who don't know, right, some of these platforms like MetaTrader, for example, there's the stuff you can do in them, right? They can flip a buy position and a sell position. It's how, some of these guys that own brokers, just everyday people, they have no financial experience. Some of them have been barely successful as traders themselves. And the reality of it, that because brokers don't necessarily trade per se, they're not retail investors, they make a market, or they provide access to a market that's been made. In the case of CFD brokers, they're literally making their own market and acting as counterparty. So in my opinion, you want to make sure that you know who you're going with, because market manipulation is real. And you'll soon find out when you get with certain brokers and you realize that every trade you put has been manipulated or squeezed out. I think the new vibe of broker, which is what they call these days prop firms or proprietary trading firms. There's nothing proprietary about them, no offense to those things, right? They would manipulate your positions worse than the regulated brokers or unregulated brokers would, because with them, it's incredibly important that you lose money because they're collecting challenge fees from you. So if they're collecting challenge fees from you, they need to make sure they keep as much of that as possible. So it is the most aggressive form of brokerage, and market manipulation is going to be experienced in these so-called proprietary trading markets. And they're also unregulated, so it's even worse. So, you've got to be careful with this stuff when we think about brokers. Money laundering. This has been a theme, especially in Europe. Brokers can be used to launder money. So unregulated brokers are a lot of the time they are associated with this kind of activity, even if it's not up front. And again, each to his own. This is what I believe. And, from my experience in this business over 15 years, there is a lot of negative, stuff associated with unregulated brokerage firms. So if anything happens to these companies, don't expect to get your money back. And they can also be shut down at any point by law enforcement who think that they're doing something illegal. All right, so I've said a lot, and to some people you might be thinking that's awfully negative about brokers. So guys, I needed to sip my ginger tea there. Been talking a lot. So some of you guys would think that it's negative, right? But just to give you an idea, and that's why I always put the proof, and one of the things I've maintained through this course is I'm going to show you a lot of evidence-based stuff, proof that you can go away and look at yourself. You don't have to listen to me. All right, so this was an article, I think it was a Forbes article, I'm not sure, which highlights MF Global. MF Global was a huge broker that specialized in futures. They did everything basically, and the firm used 1 billion of its clients' money to cover its own losses. This was a firm that people trusted. I knew people had over $10 million in this business, and this was like their entire life's work as traders and investors, right? Maybe over a 20-year span of investing and trading, they'd amassed $10 million that disappeared, and they had to wait years in order to be compensated. This is another example of why we should know who we do business with, and sadly, people didn't know. Again, the other example there is INFX. This was a European broker based out in Cyprus. $176 million of their client money disappeared. This broker eventually went under. Yeah, this was an article by Finance Magnets. You see, it goes back to 2016. So the longer you've been in this business, you've seen a lot. I'm not even going to go into the Euro-Swiss crisis, which caused the meltdown for a lot of these firms anyway. So what do I look for? Right, so I've said a lot about the negatives, and that's why that particular section of the course was called Bad in Brokers. Right, so what do I look for so I can find the good in brokers? So you want a broker that's highly solvent. Don't open accounts with new brokers. Go with the largest and the ones with the longest track record. Goes without saying. Regulated. Preferably you want to go with a regulated broker, but if you want to go with a large broker, they're really big ones. Example is IC Markets, huge broker, but they used to be ASIC regulated, but then they moved offshore because the Australians reduced the leverage and they thought it will hurt their business. So they made the very brave decision to move on offshore. So we know that they're not offshore because they're dodgy. We know they're offshore because of the economic situation. And that's understandable, right? But outside of that, if you're a trader with a lot more capital, when I say a lot more capital, that you can afford to maybe start a trading account with 50 or 100 grand, then you might not need to go with an unregulated broker because you'll have sufficient margin to trade reasonable size relative to your capital. But if you have like $2,000 or $3,000 to start, trading with, then it's going to be very difficult for you to trade with a regulated European broker or US broker. US citizens, it's going to be tough for you either way because most even unregulated brokers wouldn't take your business. So it's going to be really hard. Brokers without minimums, right? So again, brokers who want minimum deposits. This is very common with US brokers, especially stock brokers, and largely because obviously I understand the pattern day trade rule has meant that most brokers feel it's just not worth it, saying you can't do anything unless you're opening a cash account. You can't necessarily do anything with a margin account under $2,500. So it didn't make any sense. So as a result, some of those brokers will ask for minimums. But when you see maybe unregulated brokers or random brokers saying, can I get a minimum, especially in Forex or, futures or whatever, where there's no minimums, there's no PDTs. It's just whether you have enough margin to hold the trade. So it doesn't really make sense in an environment where there's no pattern day trade. You shouldn't really need to request a minimum deposit unless you had some nefarious tactics in mind, right? That's my thought about it, because unless you're betting that most of the clients are going to lose their money and you're going to make sure you help that process, then you're not going to say put in a minimum, because a minimum kind of guarantees your P&L as a broker. So in my opinion, if you see brokers doing that, for me, that's a red flag almost immediately. I really don't care. If you see a minimum on a broker, it's a red flag. All right. So I guess this is one of the shortest sections that I've covered. But as homework that I'd like you guys to do is go home, pick a broker using the methodology I have just taught you. So think about everything I've said. Go over the whole thing again. I think, go over everything we've spoken about brokers, and then pick a broker using that methodology, right? The second part of the homework is research that broker and find out their solvency. So find out if these are big enough solvent brokers that you have confidence in. Most of this information will be in public databases. You just need to find it. So that's your homework, to go away and decide what broker you would go with on all fronts. So look at stockbrokers, futures brokers, and if whatever the asset class you were trading, what broker would you pick as your broker? Awesome stuff, guys. Well, I hope you enjoyed this section. Again, the big one is coming, right? The one that you've all been waiting for. It's on its way, right? And we're going to get into the technicals at some point because I know everyone wants to do that, but it makes no sense. If you don't even know how to pick a broker and that broker is going to slip you, manipulate you, then there's nothing you learn here that's going to make you a successful trader. It's going to build you up. You're not going to improve. So even though you're working as hard as you can, you've got this nefarious entity that is taking your money. This isn't good. So that's why I'm doing this. I'm making sure that I'm cutting everything that you need to know before you get into the business of risking your hard-earned money. But anyway, guys, till the next lesson, adios.
Hey, listen, I quit. Yeah, I'm going into stocks.
Name of the game. Move the money from your client's pocket into your pocket.
But if you can make your clients money at the same time, it's advantageous to everyone, correct?
No.
No one is paying attention.
It's unbelievable.
Have to act now.
God, this is intimate. I feel like I'm financially inside of you or something.
Okay.
I have 5 houses and a condo.
I'm considering going long on April wheat. What do you think, Valentine?